10 highest dividend paying companies in Kenya, the top dividend stocks. Many people focus only on buying stocks that will rise in price, but some of the wealthiest investors out there also focus on companies that consistently share their profits with shareholders through dividends. And in Kenya, we have some exceptional dividend paying companies listed at the NSE. In today's video, we are looking at 10 best dividend paying companies in Kenya using data from 2025. This ranking isn't based on the size of dividends only, but dividend yield, consistency of payout, profitability, financial strength, and potential for higher dividends into the future. You are all much welcomed. My name is Afagza Sifuna. In case you are new, subscribe, and also you'll still add it, drop a like on this video. Having said that, at number 10, we have Safaricom. Let's begin with Kenya's largest listed company. Although Safaricom doesn't have highest dividend yield at the NSE, it remains one of the safest dividend investment because it's strong on cash flows and dominant in the market. Looking at 2025 data, Safaricom had a total dividend of 1.2 Kenya shillings, made up of 0.55 Kenya shilling interim dividend and 0.65 final dividend. Based on the average share price during the year, that tells you dividend yield was about 6 to 7%. Why Safaricom continues to reward investors is because Safaricom remains a cash generating machine. Its revenues continue to be driven by different sources: M-Pesa, mobile data, voice services, and enterprise solutions. M-Pesa alone has become one of Africa's most successful financial services platforms, generating billions of shillings in revenue. That tells you if you are an investor in Safaricom as a shareholder, you stand to benefit from you also getting part of the company's profit. And of course, not to mention even the recent expansion into Ethiopia, which is a country of over 100 million people. Those are a ton of customers. That tells you the future prospects look amazing. Of course, with every future prospect or amazing thing, there's also risks. What risks are there? Number one main risk is intense competition in telecom sector. Secondly, regulatory changes that could affect mobile money. Third, continued investment requirements in Ethiopia could actually drain Safaricom a little bit. But notwithstanding, Safaricom is going strong, and as such, I can rank it around 10 over 10 when it comes to safety, and also 10 over 10 when it comes to dividend payout or growth potential. At number 9, we have East Africa Breweries Limited, EABL. This is an important one because we're talking about iconic brands. Think about Tusker, Guinness, White Cup, Johnny Walker, you name it. All these come from EABL, and it has built a dominant position in East Africa beverage industry. Looking at 2025 dividend payout, EABL paid a total dividend of 8 shilling per share, giving investors a dividend yield of about 4 to 5%, depending on the point we're looking at when it comes to share price. While the yield isn't among the highest, it is very strong and has been strong historically. And EABL is very strategic because the company has very strong sales when it comes to beverages. It has good recovery in tourism and hospitality. Despite the fluctuations, it has better cost management. This tells you this company's future outlook is amazing. And in case you invest into the stocks of EABL, you most likely guaranteed dividend payout in the near future. Of course, like all the sectors out there, there are risks too. Among the risks are, for example, high excess taxes, changing consumer preferences, and rising costs of production, which could somewhat shake the profitability of EABL a bit, but then again, they have proved over the years that they have been going strong, and as such, their outlook looks positive, both on dividend growth potential and safety. I can give it a 9 out of 10. And then, dividend stock number 8 is I&M Holdings PLC. This is one of Kenya's most consistent profitable business, and of course, it's expanding in recent years. While it doesn't always receive as much attention as some of the larger banks, I&M has quietly built a reputation for disciplined management, strong profitability, and attracting shareholders when it comes to returns. Looking at 2025 data, We are talking about I&M paying a dividend of 3 shillings and 75 cents per share, split between interim and final. Interim was 1.5 shillings and then final was 2.25 shillings. These placed I&M dividend yield at about 7 to 8%, depending you're looking at the shares at which point in time. Why investors like I&M is because of this strong profit growth, high return on equity, healthy capital ratios, and of course, conservative lending practices which ensure it minimizes its losses. Unlike many banks in Kenya that pursue aggressive loan growth, I&M has maintained a disciplined approach to risk, helping preserve profitability even during challenging economic times. And as such, looking at these, I can confidently say the future dividend outlook and even profitability of I&M looks positive. That's why I place it on this list as number 8. Of course, also it has its risks. Like all the banks, the risk could be slow economic growth, high loan defaults, interest rate changes. However, a strong balance sheet leaves it well placed to navigate these challenges. That's why in the rating, I can give it an 8.5 out of 10 when it comes to dividend growth potential and also safety. And then at number 7, we have KCB Group. KCB Group is one of East Africa's largest financial institutions with operations across the larger East Africa and Central Africa. Its regional diversification has become a major competitive advantage for KCB. Looking at the 2025 dividend numbers, KCB rewarded shareholders with a record dividend of 7 shillings per share, comprising 4 shillings interim dividend and 3 shillings final dividend. Depending on the share price at a particular point in time, we are talking about a dividend payout of somewhere between 8 to 9% yield. Why KCB increased its dividend is because of higher payout, which of course had stronger profit growth, improved asset quality, higher regional earnings, and of course robust capital levels. All this trickled down to the shareholders. And management has demonstrated increasing confidence in the bank's future by significantly raising shareholders' distributions. The bank has also continued to invest in digital banking and strengthening its presence in East Africa. Future dividend outlook for KCB looks amazing. And as such, I'm positive. In case an investor considers investing in KCB, most likely they're going to enjoy increase in their capital yield and also they're going to enjoy dividend payout in future. Risks in this area also are risks in the macro environment. That's as there are in different banks out there. Because I'm talking about challenges around loan quality, okay? Interest rate movements, foreign exchange fluctuations. These are some of the risks. But then again, looking at KCB's asset base, KCB's profitability, they are best suited to handle these challenges. And that's why I'm placing KCB at 8.5 when it comes to dividend growth potential and also safety, right? And then at number 6, we have Cooperative Bank of Kenya. For years, CoBank has quietly delivered what many investors want: most steady profit growth, dependable dividends, and prudent management. Unlike many banks that experience large swings in earnings, CoBank has built a reputation of consistency. Looking at 2025 numbers, CoBank had a total dividend payout of 2.5 Kenya shillings, of course split between interim and final. Interim dividend was 1 shilling per share, and then final dividend was 1.5 shilling per share. With this, the dividend yield for the year was somewhere between 8 to 9%, depending you are looking at share prices at which particular point in time. And the interesting thing is that CoBank introduced the interim dividend, indicating management signaling good health when it comes to financial health of the bank. Several factors continue to drive this bank's success: strong loan growth, excellent cost control, low and performing loans compared to many peers, and dominant position in the SMEs lending space in the country. The bank has also continued to expand in digital lending, digital platforms, and this has helped reduce greatly when it comes to them locking their customers, while also they aim to reduce their operation costs. The future dividend outlook of this particular bank is amazing because of how strong it is positioned, because of its value proposition, and also the unique customer profile or portfolio the bank targets. That tells you, in case you invest in the core bank stock today, chances are you're going to realize an amazing dividend stock when it comes to payout of dividends. And as such, I place this bank at a strong 9 when it comes to dividend growth potential and also safety of the bank investment lending etc. And then 8, number 5, we have Equity Group Holding. This is an amazing story coming from humble beginnings pre-1990s to it transforming to become the biggest banking powerhouse in the region is just a story that's phenomenal. Today, the Equity Group serves millions of customers through banking, insurance, investment services, you name it, across East Africa and Central Africa region. 2025, Equity Bank did pay a first and final dividend of 5 shilling 75 cents, which was interesting because it placed its yield at somewhere between 7 to 8% per annum, which is amazing. Why has Equity Bank continued to impress? First of all, Equity's success comes from several advantages: strong regional presence and expansion, rapid growth in digital banking, diversified revenues, and excellent operation efficiencies. Unlike many traditional banks, Equity earns significant income from non-funded businesses such as transaction fees and digital services. That tells you this unique value proposition of Equity Bank tells you the future dividend outlook is bright. Regional subsidiaries are becoming increasingly profitable, especially in countries like the DRC, Congo, and also Rwanda. That tells you with this expansion and growth tapping into new markets, chances of Equity Bank continue to be profitable, to retain its leadership position in the region, and also pay out dividends is extremely high. And that's why I'm placing it at number 5 and also ranking it 9 out of 10 when it comes to dividend growth potential and safety in case you invest in this particular stock. And then at number 4, we have NCBA Group. Following the merger of NIC Bank and Commercial Bank of Africa a few years ago, NCBA has steadily strengthened its market position and become one of the country's most shareholders-friendly banks. Looking at 2025 numbers, NCBA declared a record total dividend of 7 shilling 10 cents. Of course, split between interim dividend of 2.5 shillings and final dividend of 4.6 shillings. That represents a dividend yield of approximately 8 to 9%, which actually, guys, is very high. A dividend yield of 9% per year is amazing. The steady rising dividend reflects management's confidence in the group's earnings and financial strength. Why has NCBA performed very well? Of course, because of strong corporate banking, leadership in asset financing, digital banking which has grown over time, and also expanded regional operation. The bank has also maintained healthy capital ratio while continuing to grow its profit. The future dividend outlook of NCBA is amazing, and management continues to invest in digital transformation, ensuring the bank stays at the frontier. And as such, because of all these factors, NCBA's unique value proposition, I place it on this particular number 4 and also rank it 9 out of 10 when it comes to dividend growth potential and also safety in case an investor invests in this particular stock. And then at number 3 is Stanbic Holdings. Year after year, Stanbic has ranked among the highest yielding blue chip stocks on the Nairobi Securities Exchange. For investors focused on passive income, Stanbic has constantly been one of the market's standout performers. Looking at 2025 numbers, Stanbic declared a record total dividend of 22 shillings and 35 cents, comprising interim dividend of 3.8 shillings and then final dividend of 18.55 shillings. At prevailing market prices, that translates to a dividend yield of somewhat between 14 to 15%. Guys, that is a ridiculous dividend yield of 14 to 15%. This actually makes it one of the highest yields in the market. And of course, Stanbic has been performing very well because of strong and consistent profitability, excellence, cost discipline, conservative lending practices, and of course, robust capital position. Unlike many companies that retain large portion of their profit, Stanbic has constantly returned a significant share of earnings to shareholders. And as such, the future dividend outlook of Stanbic looks amazing because, guys, this has proven over time that they are paying out customers. So I expect in future they're going to continue doing such. But then again, there are also some risks out there. Like, for example, issues around loan quality, issues around, for example, them looking at also expanding in other areas. And of course, they have a strength around them having a conservative balance sheet. This enables this particular bank to look good when it comes to dividend payout. And as such, I'm placing it at this particular number 3 ranking and even giving it a clean bill of it having dividend growth potential and also safety of 10 out of 10. And then at number 2, we have BAT Kenya. BAT is an amazing company because for decades, BAT has built a reputation of rewarding shareholders with generous cash dividends. While the tobacco industry faces increasing regulation worldwide, BAT Kenya continues to generate exceptional cash flows and remain one of NSE's most reliable income stocks. For many investors, BAT isn't bought for explosive share prices or even volatility. It's bought for dependability on passive income, basically dividends. Looking at 2025 numbers, BAT paid a staggering 70 shillings per share in dividend. Interim dividend was 10 shillings and then final dividend was 60 shillings. Depending on the share price, you are looking at whichever point in time, this is a dividend yield of somewhere between 14 to 16%, which is very extraordinary. Investor getting return of 14 to 16% on dividend yield is something amazing. And of course, BAT has key characteristics which make it exceptional when it comes to dividend payout. Among them, strong cash flows, and it generating cash flows in an amazing way. Of course, also it has high margins, low capital expenditure, and disciplined capital allocation policy. Unlike many companies on this list, BAT invests heavily in expansion projects, and also it is very keen on its operations. So, BAT is a company you could look to jump onto for you to be able to make money from dividends. However, this sector where BAT operates in also has its own risks. Case in point, high excise duty, increasing anti-smoking regulations, growth in illicit cigarette trade, and even changing consumer preferences. Even with these challenges, BAT's strong balance sheet makes it a going concern, and even so, assures us it's going to most likely continue paying dividends. That's why I'm placing it on this particular number 2, and giving it a clean bill of health when it comes to dividend growth. And of course, on safety, I can give it a 9 out of 10. And then at number 1, we have Standard Chartered Bank. This takes number 1. Although BAT paid a higher cash dividend per share, when you look at the absolute number, Standard Chartered and the top spot because of its combination of payout and also yield. For many years, Standard Chartered has rewarded shareholders with some of the most attractive dividends in the market. Looking at 2025 numbers, Standard paid shareholders 31 shillings per share, comprising 8% interim dividend and then 23%, 8 shilling interim dividend and then 23 shilling final dividend. With that, it places Standard at 14 to 15% dividend yield, which is very, very amazing. And of course, Standard continues to stand out because of a few factors. First of all, exceptional return on equity, strong capital adequacy, excellent liquidity, and conservative lending standards. The bank has built a reputation of returning a significant portion of its profits to shareholders, which is amazing. And of course, looking at its historical performance, how it's paid dividend just last year, and where it's positioned financially, I can give Standard dividend payout a positive outlook, guys. And I'm saying so because it's proven its payout dividend and is not selfish when it comes to sharing profits with its shareholders. And as such, I'm giving it a clean bill of health when it comes to dividend growth potential and also safety. Guys, what do you think about these 10 dividend stocks I've talked about, do you think they have a potential of continuing to increase over time? Which ones are you excited about? And even so, in case you've been investing in dividend stocks, which ones have you been investing in? Comment down below in the comment section. Let's continue discussing. Cheers, guys, and you all stay safe.